Hey tax students, this is your teacher Roy with a video to update you with the 2021 tax rules. If you remember last semester, that was fall 2021, our textbook was based upon the 2020 tax rules. And if you're going to be preparing a tax return now, you're not going to be using the old rules, but you need to apply 2021 tax laws. So let's take a look at some tax forms and schedules to see the common types of changes that were made for 2021 as compared to what we had learned back for 2020. So in our 1040 form, going down the lines, we were familiar with a schedule number one that reported miscellaneous types of income as compared to the common types listed here on the 1040 form. But now that schedule number one has more detail as compared to the previous year's schedule number one. Same thing is true for adjustment deductions reported on schedule number one, more detail. So let's take a look at schedule number one. Here in part one is the additional income items. And in our class, Accounting 137, one of the first things we're going to learn is to prepare a Schedule C for a taxpayer that is self-employed or sole proprietor. So nothing new there, but that's just to point out we're going to be eventually using this schedule number one to report the profit or the loss from that business. And if you remember back in chapter number 4 last semester, when you sold investments or capital assets, what you got is a capital gain or a capital loss. But now, after our taxpayer owns a business and sells business assets that was used in the operations of that business, they're going to have a gain or loss again, but it's going to be treated differently than the capital gain or capital loss that we had learned last semester. And we're going to figure out that gain or loss and its treatment here on a new form called 4797, again via this schedule number one. Now, what's different here for 2021 as compared to the previous year is the more detailed items listed here in line 8. Yeah, all of this line 8 here, including again another miscellaneous line where you would write in a description and a dollar amount, and taking a subtotal of that line 8 and the grand total of all this other income at the bottom of schedule number 1 and taking it back to the 1040 form. On the back side of this schedule number 1 are the adjustment deductions. And again, ones we'll see in our first chapter is related to people that have their own business. And because they don't have an employer to withhold taxes from their profits, a self-employed person has to pay Social Security and Medicare taxes on their own, called self-employment taxes. And we'll see a Schedule SE to calculate out that tax. But because that tax is so big, the government, the IRS, gives the taxpayer a break by allowing them a deduction roughly of half of that tax, here reported on line 15 of Schedule 1. We'll talk briefly about retirement plans for self-employed taxpayers and health insurance for self-employed taxpayers, all being deducted here on Schedule number 1. Again, the main change here on 2021 Schedule 1 for adjustments is all the detail of these other adjustments listed in line 24, where we take a grand total in line 25, a subtotal in line 25, and then a grand total in line 26. And again, putting that total back on Form 1040. Again, here back on 1040, other income from Schedule 1 and other deductions from Schedule 1, other adjustments, to get to our familiar AGI line. The next change is to standard deduction amounts, which are adjusted for inflation. And here off to the left side in the margin, you can see increased amounts for some general standard deduction filing statuses. A change that has been made to the front part of this 1040 form is deducting charitable contributions if we're also deducting the standard deduction. Last year, 2020, the charitable contribution deduction was put up here before the AGI line. Now it's moved below, or the so-called from deductions, from AGI, which is not quite as good as deductions for AGI like back in 2020. And another change for charitable contribution deductions is the amount. Here we can see the old amount, which is per return, but now it's for filing statuses other than married filing joint. But if you're filing married filing joint, the maximum deduction is now $600. Again, that's for taxpayers who are also deducting the standard deduction. Now, if you're claiming itemized deductions instead of standard, all of your charitable contributions would be put here on Schedule A and not deducted here in line 12B of Form 1040. Let's take a look at the back side of the 1040 form. So a big change is for the child tax credit. Either it can be non-refundable. Non-refundable means a credit that can be used only up to the amount of income tax you owe for the year. Or a credit can be refundable. So here is the refundable part of the child tax credit. If you remember back here at the top of the 1040 form, we would identify dependents being claimed by our taxpayers. And if the dependent is a qualifying child, we would check off possibly this box. In the case of children under age 13, you now can claim a $3,000 credit versus a $2,000 credit back in 2020. In fact, if the child is now under age 6, you can claim a $3,600 credit. I believe these increases are applicable only to 2021 unless they extend the law or make any changes. It might revert back to the $2,000 amount for future years. And the credit for other dependents that are not qualifying children, that hasn't changed. It's just a flat $500 non-refundable credit. These child tax credits are all refundable, at least for 2021. So again, back here on page 2 of the 1040, non-refundable child tax credit, including the $500 other dependent credit, or if it cannot be used up here to the extent of the tax, the refundable portion of the child tax credit can be claimed down here to increase the taxpayer's refund. Now, all of this is going to be calculated on an enlarged Schedule 8812. Yeah, 8812. So let's take a look at that schedule. 8812 is now 3 pages long. So it's getting more complex. And here you can see the increasing amounts. Now for 2021, many of these taxpayers expecting to receive this credit got the credit in advance. In other words, the government paid at least maybe half of the credit to them during the year. So what we gotta do is reduce this credit for the amount they already got. Some people got what we call the advanced child tax credit. That was payments. Let's see if we can find the line here. Advanced child tax credits. We got to subtract this out from the gross credit. So people who got this advanced credit typically got it monthly from July through December 2021. That's 12 payments, roughly of half of the total credit they're going to be expecting to get. during for 2021. Now, these credits are just an estimate based upon not 2021 because you haven't even filed your 2021 return by this July 2021 date. Yeah. So if the credit has to be adjusted, either because you are due more credit, that's going to be calculated on this form. But for some taxpayers, they got this advance payment um, incorrectly. So maybe they're going to have to pay back that advance payment. And that's calculated here on, looks like page 3 of this Schedule 8812. Yeah? Now, a lot of the lines here on this schedule are referring to a worksheet. Yeah, a worksheet that has instructions to this Schedule 8812, not in the 1040 instructions, but instructions just for this Schedule 8812. And as I record this video right now, the instructions are not even completed yet. Here you can see it's a draft version of this instructions. And if you just scan this instruction sheet, there's like about 4 or 5 different worksheets that possibly may have to be prepared. So it's quite complex if you're going to be doing this by hand. Definitely you want to probably use some tax software like we're going to be using, at least in some tax returns prepared this semester, to calculate out this child tax credit. Okay, so I'm not going to go into any detail here, but it's quite a complex situation if you qualify for the child tax credit. Again, back here in the 1040 form, either here as a non-refundable part or over here as a refundable part, or if you have to pay back taxes, that's going to be included here on schedule number 2. But the calculation is probably on the worksheet or here on schedule 8812. Let's take a look at more credits here on, well, let's take a look at more taxes. In addition to the income tax, our taxpayer may owe other taxes that are summarized on a schedule number 2. So here's schedule number 2, and we're going to learn in our first chapter, chapter number 3, a tax again called self-employment. Because our taxpayer doesn't have an employer to withhold FICA and Social Security and Medicare taxes out of their pay, the taxpayer on their own has to calculate out the tax and pay it to the government, probably by what we call quarterly estimated tax payments. We're going to learn how to fill out a Schedule SE and to calculate out the tax and rewrite the total here in line 4 of schedule number 2. But again, remember back on schedule number 1, here in part 2, let's see, right here is half of the tax, roughly half of the tax being claimed as a deduction. And on schedule number 2, again, this is the additional taxes. Compared to 2020, there's just more detail here, more lines showing various types of other taxes beyond income taxes. Going to page 2 here. Then you would take a grand total here and then rewrite it back on the 1040 form here in line 23. Let's take a look at more credits, be they non-refundable here in line 20 or refundable here in line 31, first reported on schedule 3. Here's schedule 3, and the non-refundable part is here in part 1. Let me grab my pen here in part 1, and the refundable part I believe is on the back side in part 2. We'll take a look at it in more detail for the dependent care credit reported on this form 2441, and a slight change to the education credit compared to the previous year, coming from Form 8863. The change here in Schedule 3 is just more detail, more of these lines here in line 6 as compared to the previous year. And then a grand total of all of the non-refundable credits reported back on Form 1040. Then in Part 2, here the backside is the refundable type credits. Again, just more detail. Something relatively new possibly is, well, I shouldn't say new, but it continues from 2020 due to the pandemic that self-employed taxpayers may qualify for a credit called sick and family leave. And either here or over here, sorry, over here, line H. Okay, you need to fill out this form 2702. Again, if a taxpayer is self-employed and it was affected by the pandemic, possibly they may qualify for this credit. And we'll talk again about this form 2441. Let's take a look at that form. We did this form last semester in Chapter 7, but now there's been quite a few changes to this credit. There's a couple questions here, A and B. In question A, they're asking whether the taxpayer is filing status is married, filing separate. We learned last semester you wouldn't qualify for this credit. You would have to file a joint return if you're married to qualify for this credit. But now the rule is if you were separated, not living with your spouse for the last half of the year, and you meet the other requirements for the credit, now you can check off this box and you'll be eligible for the credit. And if you're a as resident or you live in the U.S. for more than half the year, and most taxpayers would meet that requirement, you would check off this box, and then your credit for child dependent care would be fully refundable as compared in the previous years in 2020, where it would be non-refundable. Also, the qualifying cost limits have increased. If you have one dependent, it used to be a maximum of $6,000 of qualifying costs. If you had two or more dependents, it used to be 3,000 versus now 8,000, yeah? And then this 16,000 for two or more. In past years, it was 6,000. Okay, so more of the cost you pay probably can qualify for the credit. And the amount of percent of that cost would be eligible could be up to 50% here if your AGI income is under 125,000. And it'll phase out to zero. Most people won't reach this AGI limit, but if you've reached this, your percentage over here would be zero versus the 50%. So if your income, it falls in between 125 and 438, it'll range from 50% all the way down to 0%, which is much better than compared to previous years. Okay, so this is quite a big changes to the dependent care credit. Again, the big one is now it's a refundable credit. For those of you who prepare Hawaii tax returns, you know Hawaii child tax dependent care credit was always refundable. Let's take a look at the education credit. So here is Form 8863. And the two types of education credit, if you recall, are called the American Opportunities Credit, which was really no change compared to the previous years, versus the Lifetime Learning Credit, which has a change for 2021. So the actual calculation of credit is here on page 1 of the form, yeah? So American Opportunity Credit is still refundable up to 40% of the credit. But the non-refundable part of the credit, including this is the Lifetime Learning Credit, is still non-refundable, but the phase-out range is better. Here, the phase-out range for the American Opportunities Credit, it's really 20,000 below this 180. Yeah. So if you're married, filing joint, if it's under 160,000, you get the full amount of the credit. But it starts to phase out if you go over 160,000 and totally phased out for 180. Here's the range for unmarried, yeah, and totally phased out from 80 to 90 for that filing status. And the ranges here used to be smaller for the non-refundable, but here you can see it's now the same range, yeah, the same range bracket for phasing out the non-refundable credit. Yeah, higher phase-out range, which is better. So again, that's reported on this Schedule 3, the dependent care credit, and let's see, where's the education credit? Well, non-refundable portion is here, and the refundable portion of education credit goes straight to the 1040 form. Let's go back again to the 1040 form. Here's that American Opportunities Credit, yeah, the refundable part. And the non-refundable part of the education credits are here in Schedule 3. You know. A couple more items. Let's see. The earned income credit has been expanded, made bigger. Okay. Also, the phase out of the earned income credit has been moved up, so that's even better. Something new for 2021 is the earned income amount you can use. If you remember how we calculate the earned income credit is to take a look at the earned income, like your wages, or now here in our second semester, even business income could be included in earned income. And you would look that up on the earned income credit table, and you would look also up the AGI. Remember, our AGI is used a lot in our calculations. The adjusted gross income is also looked up in that earned income credit table. And of the two credits you figure out, the lower is used. Now, in many cases, if the earned income is small, you're only going to get a small credit. And because of the pandemic, possibly you weren't making as much. And the pandemic has been lasting a couple years, 2020 and 2021. So in lieu of using your earned income for 2021, the rules also now allow you to use not 2020 earned income, but 2019 earned income in the calculation. But this 2019 earned income has to be larger than the 2021 earned income if you want to use this option, yeah, to possibly give you a bigger earned income credit. The last credit we'll take a look at is the recovery rebate credit. I think it's very easy to mix up this credit with the child tax credit. So for some of us, maybe most of us, if you remember back in March or April 2021, that seems a long time ago, most taxpayers got a $1,400 per person credit. Okay? A married couple would get double that. And for every dependent they claimed, they would add another $1,400 credit. Those amounts are called the economic impact payment. And there was a economic impact payment number 1 back in 2020 and a number 2 possibly in 2020. Now in 2021 we got a number 3 payment. Sometimes people call this a stimulus payment, but the correct term is called economic impact payment. And these are really an advance payment paid to taxpayers for the amount of recovery rebate credit that's calculated now on their 2021 return. So if you didn't get all of your EIP number 3 because maybe you have a new child for 2021, yeah, you're going to now get that credit here in line 30. Or if you got too much credit, maybe you have to, well, I shouldn't say that, but To get the amount you can claim here as a recovery rebate credit, you have to not fill out a schedule or a form, but you got to go back to the instructions to the 1040 form. So here, looks like page 59 is a worksheet to calculate out this credit. So you're looking at all the people you're claiming on the return. And then multiplying it by 1,400, but you gotta reduce that credit by the earned economic impact payment number 3 you got during the year. And if you forgot how much you collected, the IRS is going to send you this notice probably here in early January to remind you that you got to reduce that credit you got by the amount of EIP you got. For most people, you'll end up with 0 recovery rebate credit. Again, possibly if they paid you not enough during the year, you can claim that additional recovery rebate credit back on your 1040 form. Okay, let's stop here. If you have questions, you can always email me. Okay, talk to you later.